Hello and welcome to another lesson. So in this lesson, we're going to be looking at why liquidity is relevant. So why are we even talking about liquidity and how is it relevant in our trading? So that's what we're going to be looking at today. So why is liquidity relevant? The reason I'm saying liquidity is relevant is because the market cannot move without liquidity. I know this is a bold statement, and this is one of those statements that you want to go back into your charts, whichever pair you're trading, whichever currency you're trading, whichever asset you're trading. Go into your charts and look at this statement. Backtest it, because the market cannot move without liquidity. If the market has not taken out liquidity, that market is not moving. It's either even if it's consolidating, you'll see that before it moves higher, it has to take sell-side liquidity. Before it moves lower, it has to take buy-side liquidity. So this is one of those statements you want to go into your charts and backtest it, because I cannot show enough examples of this statement. So smart money is always looking to buy or sell at a specific price, because they're always hunting where liquidity exists. So we have looked at liquidity as a reference point, and we have said that liquidity is the lowest or highest point that the market will want, or rather you'll want to be a buyer or a seller depending on whether you're bullish or bearish. So actually this is because when smart money intends to sell, they want to pair their sell orders with existing buy orders and vice versa. This means that when smart money wants to sell, they want to look for willing buyers who will now buy, who have placed, or rather they've placed their buy orders. So they'll run those buy side liquidity, which are just essentially buy orders that have been placed there above the high, and then now they'll use those buy orders to sell in the market and vice versa. So actually this is a statement you want to go and backtest. Look at the market before it moves. It has to take some form of sell side liquidity or buy side liquidity. So the reason we're saying you have to know about liquidity is because you want always to do what smart money is doing, and smart money will always enter the market once liquidity has been taken out. So you do not want to enter the market before liquidity is taken out, because you'll end up being the liquidity. So if you place a stop above a high or a low that has not been run, potentially the market will come and run that low or high and then reverse in the opposite direction. So when talking about explosive moves, we cannot talk about explosive moves in the market without talking about liquidity. So this is another reason why liquidity is relevant, because we want to participate in these explosive moves. So in this example, actually I've outlined a scenario where the market took out sell side liquidity in this zone here. So once the market took out sell side liquidity, we are seeing immediate response and the market starts reversing. Look at how big that move is, even just to confirm this breaking structure. So we are seeing the market move higher explosively after taking out those sell side liquidity. So essentially you will see that the market will move from a certain level with an explosive move once it takes out some measure of liquidity. So that's why I was saying liquidity is relevant. So actually what you want to do as an exercise, you want to go and identify points where the market took out liquidity and you saw some kind of move after, and you want to focus on the explosive moves that occurs after liquidity has been taken out. So you want to annotate in the 1 hour chart the liquidity grab and record in your journal. So what I want you to do is focus on the weekly and the daily highs and lows. So once the weekly or daily high is taken out, go into the 1 hour and look at what happened after that high or low was taken out. So that high or low in the daily or weekly is what we are timing, or we are saying is the liquidity, or rather the buy side or the sell side liquidity. So thank you so much for watching. See you in the next lesson.